Health insurance. Let's be honest, just hearing those words can make you think of mountains of paperwork and confusing fine print. But what if it didn't have to be that complicated? What if we could just break it all down? Well, that's exactly what we're going to do.
And that quote, it really hits the nail on the head, right? Because when your coverage feels like a total mystery, it causes stress, not security. The whole point is to give you peace of mind. So let's cut through that fog together.
So yeah, that's the big question we're going to tackle. We're going on a little journey through all those key terms and processes so that by the end of this, you won't just understand the fine print, you'll feel confident about it.
But before we dive into any of the jargon, let's start with the most basic question of all. Why even bother with health insurance in the first place? At its heart, it's all about building a financial safety net.
I like to think of it as having 4 key pillars. First, it protects you from medical bills that could literally wipe you out financially. Second, it gives you access to a whole network of doctors and hospitals. Third, it actually encourages you to stay healthy with things like preventative checkups. And when you put all of that together, you get the most important thing of all, simple peace of mind.
All right, so you've got a policy. Awesome. But before you can really use it, you gotta know the basic rules of the game. These are the conditions that kick in from the moment you sign up.
First up is this term you hear all the time, pre-existing disease. All this means is any health issue you are already diagnosed with or treated for before you got your insurance. And I can't stress this enough. You have to be totally honest about these things. Hiding a condition is a surefire way to get a claim denied down the road.
And that leads us directly to the waiting period. Think of this like a probationary period for your policy. You can't just buy insurance on Monday and then file a big claim for that pre-existing condition on Tuesday. Insurers have this buffer, this waiting time, which can be a few months or even a few years for specific things before your coverage for those issues fully kicks in. So, you've patiently made it through the waiting periods, and now that time has come, you actually need to use your insurance. This is the moment of truth, right? How do you actually make a claim?
Well, you basically have 2 main options, and the difference is really simple. It all comes down to one question: who pays the hospital first? With a cashless claim, your insurance company deals directly with the hospital. You don't have to front a ton of cash. With reimbursement, you pay the bill yourself, then you submit all the paperwork to get your money back from the insurer.
Now that cashless option sounds like a no-brainer, and it usually is. But there's one really important catch. It only works if you go to what's called a network hospital. These are the hospitals that have a pre-existing partnership with your insurance company.
So if you choose a hospital that's not in the network, you'll go the reimbursement route. And here, the ball is in your court at first. Once you're discharged, your job is to gather up every single original bill and document. And you've got to be quick about it. Usually, you only have about 15 days to get all that paperwork submitted.
Okay, so you filed your claim, but then the final bill settlement comes through, and you might notice the insurance company didn't cover 100% of it. What's up with that? Let's decode how the final costs are actually split up.
First, there's something called a co-payment. It's exactly what it sounds like. It's a cost-sharing deal. You agree to pay a certain percentage of the bill yourself. So, if the bill is $1,000 and your copay is 10%, you'll pay $100 out of pocket, and your insurer handles the other $900. Next, we have the sublimit. This one's a little tricky, but the best way to think of it is as a mini limit inside your main coverage. So your total policy might be for a huge amount, but it can put smaller caps on specific things, like how much it will pay per day for your hospital room.
And listen up, because this is where a lot of people get hit with surprise costs. Exceeding a sublimit can create a ripple effect. If you pick a room that costs more than your sublimit allows, your insurer might not just make you pay the difference for the room, they could also shrink what they cover for other things, like the doctor's fees, in proportion. It's a really important detail to watch out for.
Okay, we have definitely waded through some of the heavy stuff. But it's not all about rules and emergencies. Your policy often comes packed with some pretty cool perks and benefits, a lot of which are designed to reward you for staying healthy.
And these can be seriously valuable. The no-claim bonus, or NCB, is fantastic. It's basically your insurer rewarding you from not making a claim. Your total coverage amount actually grows each year, which is a great incentive. Then you have things like a daily cash benefit paid directly to you during a hospital stay, coverage for annual checkups, and sometimes even for alternative treatments like Ayurveda. And that's really what this all boils down to, isn't it? Every single one of these terms we've talked about, from waiting periods and sublimits to that no-claim bonus, they're all just pieces of a bigger puzzle.
And once you understand how they all fit together, your policy stops being this scary, confusing document and becomes what it's supposed to be, a powerful tool to protect you.
So, we've gone through the dictionary, we've decoded the language together, but the real journey starts now. The next step is for you to take what we've talked about, pull out your own policy, and see how it all applies to you, because at the end of the day, it's your health and your financial security. Thanks for joining me on this explainer.